Okay. Hi, everyone. I am here with Heidi Parkins. Heidi, do you want to wave to everybody?
Hi.
We are wanting to provide education. That is our goal in helping people understand the pros and cons of buying real estate and owning your own property or properties. And then, as well, just kind of understanding what the process might look like when you get to that point. So, today we're going to talk about everything you should know about buying a home. But first, I want to do a quick rundown on who Heidi is. So, Heidi Parkins, she is a real estate agent in California, and she is super good at communication, helping her clients understand what to expect, really understanding and keeping the process very fluid for her clients, whether they're selling or buying or doing both. She's incredible about really caring for her clients. I mean, the amount of help that she provides is absolutely incredible. You will always feel very supported working with Heidi. And I'm going to actually share with you on the next page a couple of things that recent clients have said about her. So they just absolutely love working with her. I mean, this lady, Sandra, says that she was a godsend. Like, come on, guys. She's incredible. So if you are looking for an agent that has your very best interest at heart, you want to work with Heidi. She's absolutely incredible. She's very trustworthy, again, very good at communication. And what you'll understand in the real estate world and in buying and selling is having that communication factor and somebody that has your back at all times is crucial. It's the biggest purchase of your life. So you want to really make sure that you have a really good team backing you and what that process looks like. So, and I have the pleasure of working with Heidi. I am a mortgage expert. So I work with residential mortgages and helping people navigate the loan process, whether it's an investment property, second home, primary residence, all of those types of things. So I get to work with Heidi in the lending side of things. So I'm Sam, by the way, as you probably already noticed. So Heidi's now going to share with us the pros of buying versus renting.
Well, thanks, Sam, for saying all that. I was going to say, so the pros in buying is the tax benefits when you buy a home, and you get to build your wealth with equity in the home. And if you can do what you want to do with your own home. As far as when you're renting, you cannot always have that option to have the pets or paint your walls and do upgrades. And but you also get to have the pride of fixing up your home at these times. um yeah. It's like, and I'm gonna hand that to Sam.
You're
It's like,
great. I agree. I love being able to do what I want with the property. Like making it my own and making it really feel like home is so fun. Putting shiplap up or, painting a room blue if I wanted to and not having to ask my landlord if that's okay. There's also a big sense of stability that you own your own home and you're paying those monthly payments to invest in your future wealth is really cool versus paying somebody else towards somebody else's wealth in the future. There's also really cool the ability to access equity if hard times come. So I'll talk a little bit more about that a little bit later. But the other question we like to ask is when you get to the point of retirement, just think like, do you want to own your home at that point? Or are you still, wanting to be paying rent at that point? So thinking now in the terms of what the future might look like for you is cool because you get to start putting those stepping stones in place to get there. And so that's kind of what Heidi and I want to help you guys with today. Now, as you guys know, when any investment, right, there's always pros, but there's also cons. So Heidi's going to share with us some of those cons as well.
yeah, well, when it comes down to making repairs on your home, they can become costly sometimes. But that is one advantage, is getting a home warranty in the beginning of the process for like the first year that you own the home. It can definitely help you out as far as costs. If your water heater were to go out, you could replace it with a simple co-payment through a home warranty versus paying the entire amount to get a water heater. And it's not as simple moving out at the end of a lease or breaking a lease when you're dealing with renting actually. And this is not a short-term asset. It is actually a long-term if you look at it the right way.
I agree. And I love what she just said, looking at it the right way. We love to educate people in why investing in real estate is a really good long-term asset. I mean, there's always changing things happening and it can be short term, but really we want to make sure you're looking at your purchase as 2 years or more that you intend to keep that property. Now, I want to share with you guys what the cost of waiting looks like. So let's just take a look at this chart. This is actually a real life scenario, somebody that I work with. So this green section over here on the left, this person bought their house, and this side on the right is if somebody would be renting at these same time frames. So in the year 2000, this person bought their home for $150,000, which that's incredible. We don't even have houses at that price anymore, right? But back then that was the thing. So they bought their house for 150,000. The home was also worth 150,000. So at that point in time, there was $0 in equity and their monthly payment was $900. So as you guys can see over time, they made their monthly payment. So year over year, their mortgage balance went down. But this is what's really cool about real estate. The balance of their property went down. So how much they owed was going down, but the worth of the home was going up. So now what you see between my hands here, this is the equity. So right here, you can see the worth of the home went up. So after 21 years, they had $258,000 in equity. Now you will see that their mortgage payment also did fluctuate. This is strictly because of property taxes. Property taxes fluctuate year over year. So you'll tend to see that your mortgage does go up just a little bit based on those. The crazy part is when you look at this side, this orange side, the family that decided to rent, they did start out at a very similar monthly payment of $900, but rents have always gone up. Year over year, trends show that rents typically increase about 3% every year. So you can see here that over time, they were spending about $500 more every month than family A was. They purchased and they also lost out on $258,000 in equity. So the cool part is if these people lived in the house for, let's say, 10 years, they could have walked away with $86,000 to use as a down payment on their next property. That's really incredible. So the real estate market really does work for you in gaining long-term wealth. That's what we're talking about, long-term wealth. So let's talk about the steps in buying a home. What does that look like? Where do I begin? What if I want to start looking into this? Where do I start? So the first thing that you would do is have a conversation with Heidi and myself, and we're going to talk about what do your finances look like? Give me an idea of, maybe what you think your credit score is, how much, if any, that you'll have for a down payment. If you do have money for a down payment, what's the minimum amount that you want to put down, or what's the absolute maximum that you're willing to put down towards this transaction? I like to ask questions like, how much have you been paying for rent? Is that something you're super comfortable with? If that is, do you want to stay in that ballpark as far as the monthly payment goes for your mortgage, or are you willing to go up a little bit from that? Is there a certain cities that you might want to work or live in? Do you want to work or live close to where you work? Is there certain schools you want your kids to attend? Whatever that might look like, these are all conversations that we're having from the very beginning so that both Heidi and I know what your goal is. What is your goal with this transaction and how can we support you in that? And so really this is the first step, is looking at all of your finances and determining where you want to go from there. Then we do a pre-approval. Now a pre-approval is you'll hear it still as people will say a pre-qualification, but really you want to be getting a full pre-approval. The difference between a pre-approval and a pre-qual is a pre-qual is a quick conversation between you and me. I ask you what your debts are, what your income might look like, and I give you a number. There's no verifications happening at that point, but a pre-approval is a much more in-depth process, and this is what you're looking for. So you can apply online. A lot of things are thankfully done online now, where you apply online, you fill out an online application, and then you're going to send me supporting documentation. So what I would ask for is I'm always looking at what have the past 2 years looked like for you as far as income goes. And then we try to estimate what the coming years will look like for you. So when I'm asking for proof of income over the last couple of years, I'm asking for your last 2 years W-2s or taxes if you're self-employed. I'm asking for your 2 most recent bank statements so I can prove where the funds are coming from for your down payment and closing costs. I'm asking for your most recent pay stubs to prove that you're still employed and you're still getting the amount that we anticipate you to get. And then we're now going into determining a conversation between our buyer and myself. We're saying, okay, what loan program would be best for me based on the documents and the pre-approval process? How much are we looking at for a monthly payment and down payment and closing costs and things like that? And then we like to talk about how long it can take to close the loan. Typically my turn times on closing a loan is anywhere from 10 business days to as long as people want. So typical is about 21 days, but some people want to push it out longer. That's okay. There is a more extensive pre-approval process that we would need to go through if it is a 10 business day close, but we could talk about that at another time. So this is just to kind of get your mind going on what documentation do I need to start gathering to get this process going. And the other thing I like to mention is this is a very open conversation type thing. If there's any weird things that come up that you're unfamiliar with, terms that we use that you're unfamiliar with, never hesitate to ask Heidi or I questions to clarify things, because it's a big transaction. We want to make sure that you feel educated along the way. Okay, the next step, this is a really important step that I like people to really understand, is the benefits of using a real estate agent. It is key. And I say that because I have a horrible story about myself that I tried to do a real estate purchase years ago on my own without an agent. And it was a nightmare. I ended up in court. It was a joke. So there are so many legalities and negotiations and all sorts of things that go into the real estate contract and what you are getting yourself into. You want to, I always look at you as the forefront. You're here. You want to make sure that there is a team of experts behind you supporting you in this transaction. And your very first step is a real estate agent. The cool part about being a buyer in a market is typically the seller pays for both agents, the seller's agent and the buyer's agent. So you really have someone on your team that has your best interest at heart, but they aren't necessarily asking you to pay them anything, which is incredible. Heidi, do you have any stories of why you've seen the benefit of having a realtor on your side as a buyer?
Yes, actually, I just went through a transaction of helping assist some buyers with the seller actually withholding the EMD deposits from us. And we did have to go through some extra steps to get that back, but hadn't it been for me to help do that, you can actually, as a buyer, lose out if you don't have someone that knows what they're doing or knows the contracts enough to get that situation, recovered. And I was able to get the buyer's money back.
Oh my gosh, that's incredible. I wish so bad that I would have had that when I went through all of that, because I literally stood alone. I didn't even know. Because you really don't know what you don't know. So that's why it's really cool to be able to depend on a real estate agent. That's what they do every day. They know the market, they know the contract, they know what the negotiations have switched from 6 months to what they look like today. So there's so much benefit in using a good real estate agent, and you will be so well taken care of if you use Heidi. I can promise you that. The next step, Heidi, will you talk about kind of step number 4 and why this is such a fun step and also like super important?
Well, we like to try to get everything set up with the buyer as far as knowing what you want in a home, how many bedrooms, bathrooms, maybe if you want a garage, yard. These are important factors because each home is obviously different, and the home that you're purchasing, you want to try to get as much as you can of what you're looking for, especially if you have schools you need in the area. That's a big factor for anyone with a family. And then we also come across the timeframes in this process too. During the whole transaction, in the very beginning, it's imperative to have the buyers have their EMD deposit ready to go. They have to deposit that within the first 3 days that escrow opens. So if we fail to do that, we can actually run into an issue to where the sellers could either come after us and tell us to get it in there now with a notice to perform, or they could actually, basically cancel the contract and throw it back on the market, and you could lose out on a transaction with buying that home. But also, we just basically try to keep you as a buyer in the loop on what's going on with these timelines, so we can get this transaction done successfully. And also with Sam here, that's part of the process too, keeping both of us in the same track with you as a buyer.
Mhm. And these are deadlines that my team and I watch super, super carefully because, again, we're on your team as a buyer. Same with Heidi. She watches these very, very carefully. She's making sure that me as a lender and her as a agent, that she's got the inspection done in time and that we've got the appraisal coming back in time. And so that's actually the next step that I want to share is what the loan process looks like. So now that you've found a home, you're super excited, you've got the offer accepted from the seller. They're like, yep, we like you. We like your offer. Let's move forward. You deposit your earnest money. So that means, like what Heidi was saying, we open the escrow. And at this point, Heidi's like, okay, let's get a home inspector in there. What's the difference between a home inspection and an appraisal? I want to explain that a little bit. An inspector is someone who's going to come through the property. They are going to test all the fire alarms. They're going to check to see if there's ever been mold in the property. They're going to check to see if the outlets work. I mean, they're really going through this property with a fine-tooth comb. So you can definitely determine at that point, like Heidi mentioned earlier, whether you want to have a warranty or not. But also determining, hey, these few outlets don't work. Is it going to be worth it for me to kind of put the money into this? Or do we want to ask for the sellers to fix some of these things? I mean, there's all sorts of things that go on in these types of conversations, and what you find out about this property, what if there's a foundation issue? I did a transaction a while ago and they said, after the inspection, we realized this foundation was literally crumbling. Okay, no, I don't want this property anymore. So you have those deadlines, right? You're able to then back out because this just doesn't seem right. It's going to be too much for us to buy this property and try to fix the foundation. So that's where a home inspection is key. Now, an appraisal is a little bit different. So an appraisal is what we need on the lending side. This is where we have a person, a man or a woman, whatever, they go out to the property and they are measuring the home as far as how many bedrooms, how many bathrooms, what's the square footage of the home, what's the square footage of the property itself, the land included. They give us a dollar amount of what this property is valued at. I have to have that for the loan process, and the buyer gets all of this information. The seller doesn't get the information on what the home is valued at and what it comes in as far as the appraisal goes, but we have to have that for the lending transaction. So there's kind of a difference between those two, but these are both things that we are ordering. I order my appraisal day one, and it's typically back within the first week. Heidi orders the home inspection within the first couple of days, and you guys get that done ASAP as well, so that we're all going into this transaction understanding what the numbers look like and also what, the features of the home and maybe the safety and things like that look like, and whether you want to move forward or not. So that's kind of the first step. Then we go into what does my down payment and closing look like? So there's a ton of moving parts after that happened on the loan side and on Heidi's side, where she's making sure everything's going smoothly. If there are some repairs that we've requested, that those are getting done in a timely manner. I'm focusing on all of I'm going to ask for, updated pay stubs and bank statements throughout the process. And we're just making sure all of the moving parts, because a loan goes through my hands, it goes through a transaction manager's hands, it goes through a processor's hands, underwriting. There's a number of different phases that your loan will go through, and making sure that we're good to go. So we plan on typically 30 days, but like I said before, we can close in as short as 20, 21 days. As long as we've done a standard pre-approval. If we've done a more extensive pre-approval, we can close in as little as 10 business days. Now, I like to tell people about earnest money. We mentioned earlier that, people put this money up front. It's basically showing the seller that you have some skin in the game. But like we talked about, those deadlines, there's potential for you to lose out on this money if you don't perform, or if you're not, ending up buying the property and they've held this property on the market for you and you decide not to buy the property, or something goes wrong in the lending process, whatever that might look like. So we follow those deadlines really carefully. But the cool part about this is, let's say you put $5,000 earnest money all ahead of time, right? This is the very beginning. It's also written on the contract how much you're willing to put your skin in the game. That money isn't in addition to your down payment and closing costs. It goes towards that. So it's initially, given to Heidi. She holds it at either her brokerage or a title company. It's up to her. But then that money, I get copy of what that transaction looks like. I get proof of all the funds. It goes towards your down payment and closing costs. So it's not like this stress of coming up with extra money because of that earnest money. We get to put that towards the lending transaction. And then all of the settlement happens. So what we mean by that is when we're transferring from this property from the seller's name now into your name, that all happens at what's called a title company. They are the people that transfer the funds to every interested party in the transaction, meaning they get the money from us for your loan. They send that money to the seller, all of the moving parts with money. It's a third party, and that's where all of this happens. So if you end up needing to bring more than $10,000 to closing on closing day, you will be doing that in the form of a wire transfer from your bank. If by chance you're under 10,000, you can do that in the form of a cashier's check. But I always like to warn people that you will be signing like 60 plus papers at closing, and most of us type all day long or text all day long. We're not used to writing that much, so your hand's going to be a little bit sore by the end. But it's all worth it. It's all worth it, I promise. This is a fun chart that I like to mention to people because this is something that I provide to all of the people that I do pre-approve. This is just an example, so it's not fair to look at this and see these numbers and think that this is your scenario. But what I like to do is making sure people understand kind of what the range of their approval looks like. And then they can look at this chart and determine, I like the number 2,500 per month. So I kind of want to stay in the 380 range or whatever that might look like for you. So I like to just personalize this to everyone's specific down payment, what they want their monthly to look like, and give them kind of a chart of what this looks like. So just know that that's something that you'll be receiving, just so you're aware of kind of the ranges of, based on this purchase price, this is what my monthly looks like. Now, I like to mention as well, just so people are aware, that there's a number of different loan options for you. And we like to determine, okay, which one is the best for me? And like we talked about earlier, this is a great question for you to ask your loan officer. It determines how much money down you have. It determines what your credit could be like. It determines if you're a veteran, you would definitely more than likely want to go with a VA loan. This is, in my opinion, the best loan program there is, and that's very deserving. So, and then we go from there. So we're kind of narrowing down the factors. So you can see here for a conventional loan, you can get into a conventional loan with as little as 3 or 5% down, and 3% would be for a first-time home buyer. And then this is also the only program that allows second homes and investment financing. I would also recommend conventional for somebody that has above a 700 credit score. If you're in those lower, below 700, we're going to kind of compare conventional and FHA and determine what would be better for you in the long term. If we're looking at FHA, this would be a 3.5% down minimum. And then this would be great for people that have maybe some more significant derogatories or have under 700 in credit. And then again, VA is for veterans. USDA is a zero down program for rural areas. And so that would be very specific to a certain city that's in a very rural area that you would want to live in. Now, different types of properties. Heidi, do you want to talk about basically standing at a street? How do you determine if this is a condo or a townhome? I mean, it's not always simple to say it's one or the other. That's where county records come into play. But there's certain things you're going to deal with a condo or a townhome. Do you want to talk a little bit about that?
Yeah, when you're purchasing a condo and townhome, it does become a little bit more different and difficult at times too, depending on the situation. But the price matters, of course, but along with an HOA fee that comes with it, they range from anywhere from $100 to $500 for our HOA fees. And that does determine, your loan amount could be set at a certain level, but you would have to almost reduce what your purchasing price point is to make it work for your monthly payments. And depending on each place versus a home, when you buy a house that's standalone, doesn't necessarily have the HOA fees that come with it, can be two different things. It just depends on what you're looking for and what works for you and your budget at the time. It just really all depends on the area and location. If you're trying to get closer to schools, sometimes they offer more townhomes than they do houses and stuff in the price range.
Absolutely. I agree. And again, like Heidi said, there's some people we'll talk to and they're like, no HOAs. I just don't want to deal with an HOA. And you're like, okay, that's great. So let's talk about the types of properties you can get in this price range based on a single family. And that is something, if you have a hard and fast rule that we will never live in an HOA community, or you love the fact that the HOA keeps up with the neighborhood and takes care of the landscaping or whatever that might look like, if that's super intriguing to you, or you get some community amenities and that's something that you really want, that's something really good for Heidi to know ahead of time so that she can be looking for the right types of properties for you. So yeah, that's great. There's all different types of properties. So now, closing costs are something I like to touch on because I like people to be educated on what this looks like. With every mortgage, there are closing costs. Now, there's two different types of closing costs, and that's what I like to explain to you guys today. And if your budget is really, really tight and you don't have money set aside for closing costs, there's some loan programs that I'm able to do what's called premium pricing and helping you cover some of those closing costs. There's also some things that Heidi knows about, that I know about, that we can help negotiate for you and helping you have a more affordable payment for the first couple of years, because I know that people are concerned about what rates are doing. So don't be afraid to ask us questions and tell us what your concerns are so we can help negotiate and navigate those things for you. Hard closing costs, let's talk about those. Those are your lender fees. There's always fees associated with doing a mortgage. So there's lender fees, there's third-party fees, including your appraisal, your title fees, your home inspection potentially. Like there's all sorts of different fees that are associated with doing a mortgage. There's underwriting fees and all those types of things. Then there's prepaid items. So these are items that you can typically won't be shopping for. This is the same across the board. So this is what your days of interest are, your property taxes, and your homeowner's insurance. So these will be the exact same no matter what lender you go with, because it's all based on the day and the month that you close and what the property's taxes are specifically, which if you buy the same property and you go with a different lender, the property is still the same, right? So that's all dependent on the property, the time of the month, and the month that you close in, and the homeowner's insurance, because it's all starting an escrow account for you to cover those costs. Now, I get asked the question quite often, like, what if I don't have super great credit, or how good does my credit need to be in order to qualify for the best rate? Now, it all comes down to the different types of loan programs, kind of like we talked about a few minutes ago, but credit is a big deal. And this you probably have understood by being an adult, and too bad we didn't learn more about this at a very much younger age, because it's not all common sense, unfortunately. But what it is the higher the credit, obviously, the better interest rate that you're going to get. Now, when we're talking, people sometimes assume they need an 800 credit score to get the best rate. It's actually not that high. For a conventional loan, in order to get the very best interest rate, is a 740, which isn't too bad, right? For government loans, so your FHA, your VA, your Utah, not Utah Housing, my apologies, your USDA, any type of government program, it's going to be a 720. So even better, right? And then again, conventional is a little bit stickier. So that goes down in 20-point increments, where government loans go down in 40-point increments. So it's a little bit more lenient. So you won't see as significant of a hit if you have worse credit and you go with a government type program. So now the next question I get is how much if I decide I really want to max out my savings and put all the money I've saved into my down payment, how much is that going to like reflect on a monthly basis? Which it's important to understand this rule. And this also ties with the HOA rule that Heidi was talking about. The rule of thumb on a 30-year mortgage is for every $10,000 that you put down towards your down payment, you'll save roughly $50 a month. So when we're talking about a pre-approval, let's say that I've maxed you at $550,000 and you come up with a property that's, has an HOA. For every $50 per month in HOA, we have to basically deduct $10,000 from the pre-approved amount that I gave you. So that's kind of how the ratios end up working out. So that's important for you to understand. So some people think, I'm going to save a little bit. I'm going to keep a little bit of money in savings because I can handle the extra $50 per month, and my ratios work out that way. And then people like to ask, is it better to go with a zero or a smaller down payment or put more money down? I recommend definitely putting a down payment if you can afford to. If you can't, then we're going to get creative for you and seeing what options we might have for a zero down program. But if you can swing going with 3.5, or 5% down, long term, it's going to be better for your situation, and you're going to save more money on a long-term basis, because your zero down programs are quite expensive on a monthly basis. So you'll qualify for a little bit less home. Now, when we talk about mortgages, these are kind of the terms we use. These are all of the things that we take into consideration for your monthly payment. We call it PITI. It's principal, interest, taxes, and insurance. Then we also might have PMI, which is mortgage insurance. HOAs, we have to take that into consideration when buying a home. If there's a second mortgage at times, sometimes there's a simultaneous second mortgage to help you qualify. And then we also like to mention that utilities aren't included. So when you're renting, maybe your utilities are included. When you buy, those aren't included and those will be paid separately. So it's important for you to understand what your budget might look like going forward. All right, I just want to pause there for questions. I always put this on there. You don't know things until you don't, until you know. And so education is huge for both Heidi and I, and we love to provide answers to your questions at any time. There's no dumb question at all, especially when it comes to the biggest transaction of your life. So if there's any questions you guys think of that you'd like for Heidi or I to answer, please don't hesitate in reaching out. Heidi, is there anything more that you want to add today?
No, I think that about you said most of everything there.
Okay.
I look forward to working with the next buyers here and getting the process done and giving the keys to a new buyer.
Oh my gosh, that's the most exciting part. I love that part. It's like you have a new house.
Mhm.
Yay.
It is exciting.
It's
Yeah, like
so fun.
finally get to turn it over.
Right? Exactly. There's a lot of work that goes into this. Heidi is really good about keeping up on what the market is doing. We've seen so many shifts over these last couple of years and the negotiations, and she's always top of her game in what's going on. So if there's questions you have about certain areas, anything like that goes, please reach out to us. We're happy to help, and we hope you guys have a great day. Thanks so much.
Bye.